Forget AI for 90 seconds. The best-performing major asset of 2025 wasn't Nvidia. It was gold, up 55%. And the miners that produce it just doubled that. These are the 5 stocks built to print money on the way to $5,000 gold. Here's the setup. Central banks bought over 3,000 tons of gold in the last 3 years, the longest sustained buying streak since 1950. BRICS countries alone added 663 tons in the first 9 months of 2025, about $91 billion in metal. Why now? In 2022, $300 billion of Russia's reserves got frozen overnight. Every central bank watched. Gold sits on your balance sheet with no issuer, no counterparty, no political jurisdiction. The dollar's share of global reserves has fallen from 71% to 57%. JPMorgan now forecasts $5,055 gold by Q4 next year. Goldman Sachs says $5,400 by end of 2026. Spot today, $4,540 an ounce, up 41% year over year. The trade isn't whether gold is going up. That's already happening. The trade is which businesses mint the most money on the way there. 5 names. 1 major, 1 Tier 1 operator, 1 Canadian compounder, 1 royalty, 1 streamer. Different risk profiles, same tailwind. Also, one of these names doesn't even run a mine. Keep watching. I'll show you which. Stock 1. Newmont. Ticker NEM. World's largest gold producer. Q1 2026. They posted a record $3.1 billion in free cash flow. 1 quarter. All-in sustaining cost at $1,029 an ounce. At $4,500 gold, that's a $3,400 margin per ounce. Multiply by 6 million ounces a year. That's a money printer. They just authorized a $6 billion buyback. $8.8 billion in cash on hand. Stock 2 coming up. One of these names has a hidden copper kicker that almost nobody is talking about. Stock 2. Barrick Mining. They rebranded from Barrick Gold. Ticker is now just B, but you'll see gold on most platforms in transition. Tier 1 assets globally. Higher AISC than Newmont at $1,708 an ounce. That's the opportunity. Wider margin on every dollar gold moves up. Plus a hidden kicker. Reko Diq, one of the largest undeveloped copper-gold deposits on Earth. They're spinning out a North American IPO and authorized a $3 billion buyback this quarter. If AISC compresses, this is the biggest upside in the basket. Stock 3, Agnico Eagle, ticker AEM, Canadian operator. Q1 2026, record net income $1.71 billion. Realized gold price $4,861 an ounce, AISC 1.483. Their assets sit in Ontario and Quebec, powered by hydro and nuclear. No diesel cost inflation, no coup d'etat risk, up to $2 billion in buybacks renewed. Production growing 20 to 30% over the decade. If you want gold exposure with zero geopolitical drama, this is it. Stock 4. Franco-Nevada. Ticker FNV. This is the name that doesn't run a mine. They own royalties on roughly 400 properties. No equipment, no miners, no diesel. They take a cut of the revenue. Q1 revenue up 77% year over year. EBITDA margin 91%. When gold rallies, almost every dollar drops to the bottom line. AAA ESG rating. Boring is the point. Stock 5. Wheaton Precious Metals. Ticker WPM. Streaming model. Similar to royalties but tied to specific projects. Q1 revenue up 92%. Operating cash flow up 112%. They just signed a $4.3 billion Antamina silver stream expansion. Dividend up 18% year over year. Wheaton gives you silver torque on top of gold. If silver finally catches its bid, this is the cleanest way to play both. Now the leverage math. In 2025, the gold ETF, GLD, returned 52%. The miners ETF, GDX, returned 1 to 10. The miners doubled the metal. Mechanically, AISC is a fixed cost base. Every $100 move in gold drops almost dollar for dollar to operating cash flow. That's why these stocks compound faster than the commodity. Now, the risk. The thesis breaks if two things happen together. 1. Real yields spike above 2.5%. Fed stays hawkish. Inflation drops fast. 2. Dollar rally on U.S. economic outperformance. Both at once could push gold back to 3,400. Watch the 4,300 weekly close. Below that, the trend cracks. Goldman says 5,400. JPMorgan says 5,055. Central banks have bought more gold in 4 years than they did in the previous 15 combined. You don't have to time the top. You own the businesses that mint money while it gets there. Full thesis is in the pinned comment. If you want more breakdowns like this, you know what to do.